Happy 4th of July, traders. Okay, and I'll try to keep the video under 30 minutes here. So we'll go through them real quick here. So basically, my primary thesis here, we still haven't come down and retested these prior pre-COVID highs. These are the pre-COVID highs, and that also lines up about the same price point. That's the post-election day. So, in my opinion, this area, everything above the post-election day, or this area right here, the pre-COVID highs, that is your head for a head and shoulders pattern. And I do not think we've even completed the head yet on the potential head and shoulders pattern here on the S&Ps. So, that's my primary thesis, and I'm sticking to it. So we haven't even got into earnings season, which here in the next 2 weeks we're going to start in the banks. So let's just keep this one on watch. Still thinking that is the ultimate plan here to be going down there. We are still on the bullish side of our primary trend, which it coincides with this prior trend all the way back here. So we are still managed to hold the bullish side here. Definitely could be coming up and coming back to the top of your Andrews Pitchfork course, and then maybe later in the year be breaking down. There's always that scenario, okay? But ultimately, retesting these pre-COVID highs, that is where I think price is going to go this month before we actually see a real buying coming back into the markets. So definitely keep that one on watch going in your trading right here. Okay, that's my one of my primary thesis. Channel view. Go with this one here. This here is our primary channel. Yeah, as you can see, if you put a channel, so we are broken on this view. So our extension has actually broken out of this channel right here. Okay, that's one view looking at it. Uh, channel one. Okay, I just gave you that one. Okay, let's go channel two. Channel two. Okay, now this is a more constructive, detailed view of where we're at currently. Okay, and so basically we're below both of the midlines on both of these channels. You got an uptrending channel and then the downtrending channel. So this is still very precarious for the bulls. Okay, so definitely keep that one on watch going forward. Okay, some other ways of looking at the markets here. Last time we had a closing price like this, we closed still below the developing weekly pivot. So basically, of the inventory that hit last week, we weren't even strong enough to close above. We're actually going into next week. If we were open flat, we would be below next this current week's pivot. Okay, weekly pivot, and so tends to be a very difficult situation to get new money to come into the market in the overnight session ahead of the markets. So in all likelihood, we're going to be flat to lower, in my opinion, coming into Tuesday. So be aware of that situation. The last time we had this situation, we came in really hard to the downside. I mean, extremely hard to the downside. So be aware of that situation going forward this week, okay? I definitely wanted to float that idea, guys. And then also, here, let me go back over here to this one. Let me go over to my market maker moves. There we go. And then our market maker moves for this week. So, I didn't do SPY. Let's go to yeses. I didn't update SPY yet. I got to update that one. I thought I had them all fixed. I'm sorry about that. Or I can go SPX. Let's go SPX. I know I did that one. Sorry I messed up on that. I thought I had them all done. I'll have to go back and redo that here in a second. And market maker. There you go. I have updated these. Okay. And that's why I put the date on my charts. Anybody who's using Thinkorswim, if you update your charts, it's somewhere on your chart you should update. Should put whatever date you update your chart patterns. You should date it to make sure you keep things current for your own safety and stuff. So bottom line is we're coming into this week. Here's our market maker move expected moves, and they're still expecting a possible weekly 150. Okay, this is our weekly 150 SMA market maker move low. So definitely keep that in the cards here. that we could be coming down this week, back down to the 50, down to this, and that's assuming no outside moves in the markets outside the expected move. Last week we didn't have an outside expected move. But we've been having several weeks, that we have been having it. Maybe we don't have it this week. Maybe we do. So just keep that in mind. Our histogram is starting to turn bullish as of Friday here on the daily, and our signal lines might be starting to cross a little bit bullish as well. So there's a couple things thinking that on our oscillators that we might be starting to see some bullish, less bearish stuff happening in the markets the first of the week as far as the oscillators go. Okay. Then if you go over to my center of gravity study here, I want to show you something on our oscillators here. So we do have a bullish, we got some bullish signals going on right here, potential bullish signals setting up here for the SPX going on here. Looks like the histogram might be about to turn positive here on our MACD. We're getting a cross on our signal lines right below the 0 line. So, there are some things coming together there that might suggest we might start getting some new money coming in here on our momentum oscillators here. So definitely keep that on watch going forward here. Okay, that's SPX. Qs. We'll just start with this one since I'm already on it. Similar situation. They seem to be, as I said last week, it seemed that they were trying to put a base into NASDAQ coming into this week based off of the expected moves. And so this week, we're actually getting a little bit better signal here on our oscillators. So we'll see what happens going forward here. It looks like we've had, as of Friday, we got a little bit more here, a little bit more strength here on the oscillator going into the close on the 2 hour. Let's see here what else we got on these other charts. I'll go down here with our similar situation. See, we closed well below our weekly pivot, developing weekly pivot for this week. So that's why it strongly suggests we're going to probably have a weak open to start the week here. And this is extremely bearish here on our pivot side. So just keep that in mind. Starting a new week in this situation is really not a buy the dip situation. You really want to wait until you start accepting price above your weekly pivot to start new long positions in this market. So just be aware of that situation. Like it'd be 285 before you'd even want to really start considering the long side. It's clearly the bears seem to be still clearly in control of the Qs here. So definitely be aware of that scenario. And as far as channels go, let's go here. Go down here to my channel chart. Here's what we got going on our channels here. So basically, we've been basing down here, broken out of our primary trading channel. This was our primary downturn trading channel. We were so weak that we couldn't even get back up into that, if that gives you some idea of what's going on here. And we're still on the bearish side of this this uptrend channel, and well bearish of this downtrending channel. So two different confirmations here. We're still not giving us a valid reason to be taking swing longs. Okay, guys. So definitely keep that one on the back of your in the back of your mind. Okay. Then we have IWM here, and we go to our let's go to our channel view first of all. So here's what we got going on with IWM, our current channel view. So we are slightly a little bit more bullish here on IWM on the channel basis. Ultimately, what I think is playing out here, this is your shoulder area, long-term shoulder area here, IWM. This is your head. So we're actually right on the cusp of breaking that head and shoulders pattern if we get some sort of sell side action. We are fighting the election day as we speak, and we are starting the second half of the year fighting election day. Not necessarily a good place to be to be starting the second half of the year, in my opinion. So just some food for thought going forward here. Other things going on here. Similar situation. This one here is not quite as bad relative to the developing weekly pivot. Could very easily open right on that. Uh, so this is probably the least bad of the three major indices, but it's still in the same situation below the developing weekly pivot. So, you got to definitely be aware of that situation. And then on our center of gravity study, real quick here. So we do have here. This is 2 hours going to daily. See what we got going on here. Yeah, it's still not looking too healthy here. See here on the daily time frame, it's still looking pretty ugly here on the daily time frame. Histogram is the past few days here on our histograms pretty well gone flat though for the past few days here on the daily time frame. So that might be interesting. Maybe something we're trying to decide what to do here. They've done it before. See what they've done before, just to resume lower again. So be aware of that situation. They might be building for the next leg lower. It looks more and more like to me that they're building for the next leg lower on IWM than actually trying to push to the upside. Okay. Oops, wrong thing. Okay, some other things we're looking at here. Levi's reporting this week. Now, one thing I like to look at if I'm ever looking at Levi, that's Nike. And Nike had very disappointing numbers out of China. And Levi's really big in China and Russia. Okay, so I'm fairly bearish here on Levi going forward here. To complete this pattern, though, you see the cross right here on your, so I'd be 1291. 1291 would be your possible target this week here on Levi. Let's see how close we get to it here on earnings. I could be wrong. It could rally, of course, but I'd be thinking 1291 is quite possibly in the cards, knowing what happened last week with the earnings with Nike. Okay, some other things coming out this week. We have to be worried about the guidance revisions here on some of these earnings coming out this week. There aren't too many coming out this week on warning about their Q2. General Motors, Kohl's, and Micron last week, they all warned disappointing guidance going forward. And the big one this week is Ford. Ford's got the new electric pickup truck coming out. But yeah, even with that going on, the bulk of their sales are the F-150, F-250, the gas guzzling vehicles. And in the current climate, I would venture to say that they're probably going to have that is one area of the market that tends to have some trouble. But now, don't get me wrong, they still have to restock the car lots. There's even if the sales are down, they still have to replenish those car lots. So it's their car sales reflect how many orders are coming from the car lots, not the actual end consumer sales. So just remember that when the numbers come out this week. Initially here, they might still have some oomph in their numbers because they do have to restock these car lots, even if consumer demand is not supporting the current production levels. So be aware of that scenario coming into this week. Okay. And we're going to have a lot of news out of the airlines this week, especially with American Airlines. And they had some sort of thing where the pilots, they were able to take off for a month from some sort of software glitch or something. And so a bunch of flights got canceled over the 4th of July because of it. So a lot of these, they're going to be coming out with forecasts this week. We've got Love coming out with guidance and forecast this week. American Airlines coming out. American Airlines is one that was hit. It could be hit. And that what's going on with American could last all of the month of July. Be aware of that. And Delta, DLT, I think. D Delta DAL. There it is, and Delta Airlines. Okay, actually, Delta is actually reporting next week, so be aware of that. There's going to be some guidance and stuff coming out of all these earlier this week, so be aware of that situation as well. Then we got jobs coming out. They're expecting $250,000 in June. Remember, guys, uh, they're probably going to get every bit of those jobs creations because you've got all the people who just graduated from high school who are not going back to college because enrollments are way down because there's plenty of jobs out there. They don't need to go to college. Okay. And then you have all the high school kids getting out on top of that. So they're getting jobs. Yeah, well, the high school kids and the college students, both of them are getting out the first of this year. And it's all going to be reflected in this June report. So if anything, the June report's going to be probably really hot. They're expecting also an unemployment rate of 3.5% or 3.6%, and it actually might be lower than that, believe it or not, because of all these youngsters coming into the workforce. Be aware of that. We got the FOMC minutes from the last meeting coming out this week. We got a bunch of Fed speakers speaking this week. We got Bank of America is expecting probably talk this next meeting coming up. It's going to be 75 basis points. Then after that, it's going to be 50 basis points in September. And then from there on out, we're probably going to go back to 25 cent rate increases going forward from there. So that's some things going on in this market that I did want to let everybody know about what was going on. Another thing we got to really worry about is for the bearish side, JP Morgan. And if I go over here to my other chart on JP Morgan, right below the current price is a big gap. We managed to bounce off just a little bit. Guess what? First thing Monday morning or Tuesday morning, we are ex-dividend on JP Morgan. There is a very likely chance we're going to be gapping down into the gap zone here on JP Morgan, possibly putting a lot of pressure on your big banks. Centers, so be aware of that because we do have that situation hitting. We do have Verizon and AT&T have an ex-div this week as well, so keep that in line too. And then we also have one last thing happening this week: SAVE. That's also with your airlines. SAVE looks like it's ready to bust out of this downward trend. Remember, Wednesday of this week, the shareholders are voting on the takeover from Frontier. So be aware of that situation. This looks like a breakout pattern going into the news scenario that we have setting up here going into this week. So I definitely want to float that idea. I can make both cases, bullish and bearish this week, but I'm still leaning a little more bullish. I don't know if all the 401k money for the first of the year has actually been processed yet. And I still think that's what happened Friday afternoon. We had that little rally, end of day rally in the markets. I think 401k money came in. There just wasn't enough sell side action to offset the new monies coming into the first of the month monies coming into the markets. And so I'm not for sure if all that 401k money has actually fully come in to the markets yet. So you have to be careful here the first of the week, especially in the afternoon hours. If these fund managers are wanting to allocate that money, before the end of the day. Okay. So thanks a lot for watching my video. If there's anything that you know about that I need to know about, please let me know. So please retweet me on Gumby9662C on Twitter. And, like my video if you like it, please. Appreciate it.